Welcome back to the channel. Today being the 10th March 2022, the headline that you see around will be inflation. Inflation rose to 7.9% the month of February 2022 compared to the month of February 2021. 7.9%, which is the highest in over 40 years. Economy, inflation, and the market. The market has been playing ping pong with investors. Today Dow will lose 700 points. Tomorrow is going to gain 500 points. Next tomorrow, 800 points. Another day, 2.5%. Look, the market has been playing ping pong with investors. And going back to years back, the month of March seems to be the bottom month. Last year, this time last year, the market was bottom. The market was down. 2022, we're in 2022 now. 2021, the month of March, market was bottom. 2021, the same thing. Year 2020, that was the year of the lockdown. We all knew that it was COVID-19 and the pandemic, so market bottom. Even if you go back as far as 2019, 2018, the month of March seems to be the bottom March. We are definitely in risk of sentiment season. The investors have to make the right decision. You have to make decision of choosing value over growth. Yes, value over growth. This is the time that valuation matters. You need to consider companies with cash flow, companies that are liquid. This is the time that you need to check the balance sheet, income statement, and to ensure that the stocks you have, the assets you have, they are value. You have to consider value over growth. The geopolitics is weighing over the market. The conflict between Russia and Ukraine is not getting any better. Sanctions here and there. Russia becomes the most sanctioned countries in the world. Different companies are pulling out. American companies are pulling out. PayPal is pulling out. Google is pulling out. Facebook has pulled out. Starbucks has pulled out. Coca-Cola, a lot of them. McDonald's. Look, it is not getting better for Russia. What Russia was anticipating that it will happen, the reverse is exactly what is happening. Russia feels that, some days ago, it was quoted to say that the US is weighing economic war on Russia. Have a look at the market. Let's have a look at S&P 500, Dow Jones, and NASDAQ. We'll also have a look at the US CPI inflation. It's 7.9 as of today. Let us see if there's any information we can get. Also, the equity market still remains where you can get the highest return, even though the US Treasury yield is rising and investors are also hedging with the Treasury yields. However, the most return that you can get is still in the equity market. So let's have a look at the S&P 500, Dow Jones, and the NASDAQ. So we are looking at S&P 500 on the weekly chart. As you can see, we are sitting on a support here. On a weekly chart, we're sitting on a support this week. This is the week. Each candle is a week. So we're sitting on a support this week. This week so far has been bearish. Let's look at it on a daily chart. On a daily chart, as you can see, we have been in between this channel here. Today it will lose 500, tomorrow it will gain 400, another day 700, another 2%, 3% ups and down. So we have been trading below 20-day moving average for S&P 500 on a daily chart, but it is currently on a support here. Let's have a look at the Dow. It is very similar with the Dow. Let's draw our support line that we can see here as well. This is the support line, and we can also draw the resistance here to show where a small channel that we have been in throughout this week and last week. So you can see the market has been chopping in between here, 400, 500 today, tomorrow, So, but the sentiment is bearish. We are below 20-day moving average. This is for Dow Jones. On a Dow Jones, we are still within the correction territory. Correction territory. Let's have a look at it on a weekly chart. The weekly chart is similar to that of S&P 500. We are also here sitting on the support line here. Just trying to draw the support. My mouse is a bit funny. My mouse is hanging. Okay, sorry about that, guys. So we are sitting on a support here on a daily chart. I mean, on a weekly chart for Dow Jones, but we are below 50-day moving average. Let's have a look at the Nasdaq. The Nasdaq is a bit different. The Nasdaq, we've actually crawled into bear market on the Nasdaq. This is a weekly chart for Nasdaq. The Nasdaq is far below, deep than the S&P 500 and Dow Jones. For the Nasdaq, we are below. Yeah, but we are still we're sitting on a support as well, but we are deep down. Let's have a look at what the market has dropped. What Nasdaq has dropped from the recent high of January. From the January high, it has dropped about over 17%, 17.9%. So we're definitely in the bear market for Nasdaq. Let me draw the support line that we can see here on the Nasdaq, and we can see the resistance here. So we have been trading in between here. We're consolidating in between here, which is below the 200-day moving average. So guys, we are not out of the wood on the Nasdaq. We are deep in bear market on the Nasdaq. On the Dow Jones, we are still within the correction territory, and on the S&P 500, we are also within the correction territory. This is Fred data, the consumer price index for all urban consumer, all item in the US city average. That's the index in the blue, and the one in the red, consumer price index for all urban consumer, all items less food and energy in the US city average. Now, this is where we are, and this is for the consumer price index for all urban. This is the one, the exact 7.9 as of today, compared to the same period last year, 2021. It's 7.9%. We have seen the chart. We have seen S&P 500 and Dow Jones. The most important thing is to play value. The value matters most. This season, in this period of risk off, value is king. Value is what you need to consider in your portfolio. Thank you for your time. Thank you for subscribing to our channel. We will continue to produce content that will support your investment journey. Thank you.